Good afternoon, everybody. It is December 2nd, and you're watching the Stock Market Report, where we use technical and intra-market insight to navigate today's markets. We got a lot on deck today, but it's going to be very short, to the point, and be really focused on tomorrow's trading session. So let's go ahead and get right into it. We're going to start off looking at the 11 sectors that make up the S&P 500. Technology led the way, and that makes a big difference for the overall market. The market ended up being flat. We did see a lot of the sectors in the red. In fact, small caps finished basically flat, mid caps slightly there down. You could look at the heat map here and you see a lot of red on the screen. But when those big green squares are lit up, well, guess what? That's typically means that the market's going to hold itself together because it is a cap weighted index. If we take a look at the bullish percent chart, we've been seeing a nice pop right here. This is the discretionary sector, and we've been calling out a bullish divergence over here. It played out to the upside. Now we're moving into more of an overbought state via the RSI. Now, overbought can remain overbought for quite some time, but it is still worth noting, and it's always nice to start to see these divergences form throughout time. If that is the case, as we've seen multiple bullish divergences, it's also worth noting when we're overbought and also bearish divergences form. The bullish percent chart for the technology sector still has a way to go to become in an overbought condition. We recently called out that it was an oversold condition, and from this point, being a very extendedly low reading over here as well, we called that out when it was down here. Looking back through history of the times that it did this, we typically see bounces, and while technology is seeing a nice reflexive bounce from its recent sell-side activity. If we take a look at the BPNDX chart, which is very similar to the tech chart, it's also kind of cranking up, not in an overbought or oversold state, but it is moving towards the direction of an overbought condition. If you take a look at BPSPX chart, we saw this bullish divergence form over here. The market led itself higher, and we're not yet in an overbought condition as it stands right now either. If we take a look at the sailor to shift tool, this started to creep up ever so slightly over here. We talked about this very extended reading. We look back through history of the times that we've seen an extended reading to the downside, meaning that gold outperforming Bitcoin from a negative rate of change perspective over here. From a pretty large perspective, like if you look to the left, I mean, this is 22%, right? Differential. So there's a big difference there, and it's a pretty rare reading that you see on this sailor to shift tool. And when we got those readings in prior history, we see bounces, and right, we sold off hard, gold remained up to flat, and then we're starting to see now a little bit of a rotation back into Bitcoin, at least today. In yesterday's video, we talked about the possibility of looking at MicroStrategy for a reflexive type bounce and kind of walk you through the thought process there. That was up from about 7%, finishing around 5% on the trading session. You'd see over here, Bitcoin finding a little bit of a bounce over here, but still nothing is actually constructively fixed on this chart. The only thing that we have right now is a higher low, and that's a positive sign, but yet we still have a series of obviously lower highs as it stands. So this could pop up, maybe back up to and around the 100K marker, see what it does, see how it consolidates and sets back up, and perhaps maybe get another buy signal or buy trigger in the near future. Let's look at the market conditions. Our sentiment index is at 57.8. That's a preliminary reading. I still have to wait for the data set to fully update, but that's pretty much where it's going to close off for the day. The other prior trading session was 58.1, so not much of a movement here as far as the sentiment index goes. It's rather in a neutral state. If we take a look at GEX levels for SPY, and for those that are in the Discord group, right, this is one of the benefits that you get. You get the entire TradyTix posting bot suite amongst all the other stuff, right? The Asher query, which gives you weekly, daily, monthly expected moves for whatever asset that you want to type in there, the alerts of when any of those bigger assets that have weekly expirations hit those moves, those levels, you get automatic there. That's not even listed there. You get my watch list, tight list, all kinds of good stuff. $16 a month if you want to do it, but if you want this specific one, you go to the TradyTix query and you could type in /gex, right? /gex, then SPY is the ticker, and then you would do, for example, today, if you wanted to what it might look like tomorrow, go December, right, 3rd, right, because today's the 2nd, go December 3rd, and you'll get this specific chart. And we're going to walk kind of through this here. As you can see, there's a pretty big level at 675, and you got one here at about 685 right over here. And then over here, you have a level at about 681. We have a couple of dark pool prints that actually we played into today, 683.1, and then the other one here. So what I like to do when we look at these, right, I like to put them on my screen. But more importantly, one of the bigger aspects here is what you want to look for going into tomorrow is what the flow looks like going into tomorrow's trading session. This right here is the cumulative net premiums of calls, cumulative net premiums of puts. And it's important to watch the direction of these, how they play out throughout the day, right? For example, this started going down while this one started creeping up. What happened to the S&P 500, that white line? Well, we saw that sharp decline throughout the day. So how did these levels play out? The ones that I shared with you on the prior market brief. In fact, actually the prior market brief, I had the levels incorrect, but I adjusted it in the comment section. So hopefully you saw that. But we had these specific levels. We came into the dark pool print and that big GEX level, and we just basically fluttered around there all day, not even making it to the daily implied move on the SPY. On the SPX, we actually tagged the SPX upper daily implied move to a T, and then we backed off from that point and came up a little bit. So going into tomorrow's trading session, what does this look like? Okay, so these are the updated levels. The thick level is the one that you want to pay most attention to right here because we're right at it. So this 681, if this ends up breaking, right, if we end up breaking 681 and holding below it, this opens the door down to that larger magnetic level, which is about 675. And that's also down here where our daily implied move is. Now above us, if we can hold 681, right, or dance around and break above it, this opens the door for the upper daily implied move and that 686 to 685 gamma exposure level. You can see the 681 dark pool print. If you go this to the side, look at how we played within it today, right? We danced around it and we kind of rejected from that level. So in overall, what I want people to pay attention to going into tomorrow is the trading market net flow, is this going to be bearish? If it is, like say, for example, we have a red line that's going up and it's above zero, and then we have a green line, right, going sideways or down below zero, this would be a very bearish look for the market, and that would make me think that we're going to be breaking that 681 and then opening the door down to these lower levels. Now, if that's not the case and we have bullish looking market net flow, the green line goes up, red line goes sideways, and so forth, if it's a bullish tilt to the market, I would want us to hold that 681, and if that is the case, I'd be looking to trade higher into the upper daily implied move and those higher GEX levels. If you want to look at the S&P 500 daily implied move going into tomorrow, it's 6864 and then 6794. Now, we have tagged the weekly implied move every week this entire quarter, and this is a pretty large implied move for the week. So remember, there's going to be times where we don't tag it. And if I were to make a bet here, you know, this could be one of those weeks given the context of us just kind of consolidating a big run. But if the market does see some sell side activity and we have the flow that matches, right, the market net flow that matches it, I would be open to the prospects of coming down here. And if that's the case, I want to be very clear here. We are still above the gamma flip line. That gamma flip line is roughly at about 67.25, 67.30. That's below the weekly implied move. So even down here, we would be in positive gamma. So dealers would look to buy the dip, sell the rip. Volatility is typically suppressed. We would be right in and around the lower weekly implied move. Totally normal. And then also, we would be still trading slightly above to and or right around the VWAP from when this whole rally kind of kicked off into high gear. So this would be a very big level of interest, the zone in here that I'd be really paying attention to see what price does to basically create some sort of a trade in and around those areas. As far as the direction of the 5-day moving average goes, biotech turned red, right? It's been kind of selling off pretty steadily here. Saw some big names getting crushed today in the healthcare space, even the biotech space. Yeah, if this starts bouncing up, just remember we're starting to flatten out to turn around. So you want to see it, you know, get back above it and move like this versus try to just buy it on a strong move and then it gets rejected and then all of a sudden breaks down lower. So for those that are patient, right, you want to see this to start flattening out and turning back up. Now, as far as the SPY, Qs, IWM goes, I'm sorry, this one actually should be yellow because we actually closed underneath it. So I forgot to change this out. So this would be yellow, but it is still inclining at the time, just giving us a little bit of a warning, going sideways right now. Qs held up stronger today, still above its inclining 5-day, and then SPY has been kind of chopping sideways right now, but yet this would still be considered a bullish consolidation overall. But now we just need tomorrow's flow to make us, you know, be more bullish to head up to the upper daily implied move and potentially even the higher weekly implied move this week if it is possible. That's all I got for you in today's video. Hope it helps out. See you on the next.